Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, global strategist at Yuanta Securities. Mr. Yu, thank you for joining us today.
Thank you for having me today.
Well, we're just a few days away from that deadline set by the U.S. for a trade deal with China, where it's going to impose more tariffs December 15th. How are the markets responding to that?
Yes, the market seems to be quite volatile, actually taking some breather, because until the beginning of this week, the market's been quite strong due to a lot of the economic numbers coming out from the U.S. as well as China. And I don't think that the U.S. will probably raise taxes, even though that the trade deal might not be signed before that date of December 15th, because the additional tax increase means that the U.S. will face quite significantly higher inflationary environment. And right now, it is the core inflation is at around 2% territories. High inflation means higher interest rate, and that means a recession coming through quite soon. So therefore, we don't think that the U.S. will be in a position to raise the additional taxes at this point in time. And also, though, U.S. can continue to put pressure on China with the current tax rates that already applied. On 15th of December, no tax will be raised, but until the actual that date, market should be probably taking some breather and might be somewhat volatile around the current territories. And once the no tax was probably announced, if it is announced on the 15th of December, the market was to take the additional strong gains in the future.
Right. Well, shares of Saudi Arabia's national oil company Aramco will start trading this Wednesday. What effect do you think that might have on the Korean financial markets?
Well, I think it already did quite a bit of negative implications. As you know, that the foreign investors were a big major net seller in the last several weeks. Just a 1 month period, they sold over $4 billion of Korean equities. And that's because of the two reasons. One is that the Aramco listing is expected to happen, and they need to raise money. And also the MSCI index changes where the percentage of Korea goes down while the China goes up. So those two factors have affected negatively for the Korean equity market, and that has created a huge decline of the Korean equity market by more than 4% in the last several weeks. However, though, once the listing happens this week, we don't think that there will be any additional money going into this listing. Even though the Crown Prince Mohammed bin Salman is talking about the fair value should be $2 trillion rather than the current $1.71 trillion that is expected to get listed. If the additional money pours into this, then yes, that could have an additional negative implication for Kospi. But I think that already the money has been raised, and I don't think that any additional net selling will come through because of this listing on Wednesday.
Well, now we have news that the People's Bank of China will soon start testing a digital currency, which will be a first for a major economy. How is this similar to or different from cryptocurrency, and what effect might a digital Chinese currency have globally?
Yes, Jack Lee, the managing partner of HCM Capital, said that China is developing a framework called the Digital Currency Electric Payment, or DCEP. This would allow a central bank to issue a digital currency to commercial banks and third-party payment networks such as Alipay and WeChat Pay. Several experts have warned that the virtual currency could increase the risk of fraud, particularly money laundering and terrorism financing. But many governments have not found a way to regulate the space. It seems that obviously China is the first one to come out with this. And the launch of China's digital currency could push many authorities globally around the world to decide on how they want to use and regulate such technology of this. The new details have been revealed by the China of upcoming digital currency, which appear to confirm the speculation that it will be fully centralized. The key factor about this is centralization. A centralized digital currency in China is a worrying proposition, given that its social credit rating system, estimated to be fully live in 2020, cracks down on its citizens for violations as small as playing music so loudly on train or combining this with the full control over the wealth makes citizens powerless. This is an argumentation that's been made. But in any way, China is well in position to try to do this because it is trying to move away from the dollar-denominated global trade to more of a renminbi-denominated trade percentage to be increased in the future. In any case, this digital currency will be one method to reduce the power of U.S. and dollar while raising the power of the renminbi as well as the Chinese government's influence into the global economy.
Fascinating. That's where we'll have to wrap it up for today, though. Mr. Yu, thank you for coming on. We appreciate it.
Thank you very much.